I'm going to start off with the shilling today. I mean, if we look at it, we've seen it benefit from foreign inflows to the various bond issues. We've seen an uptick in tea earnings and tourism earnings as well. Remittances have increased, but there's this looming threat of the political situation in the country. How are you reading it at the moment?
You're spot on. Actually, the shilling has displayed a great deal less beta than even the South African rand over the 12 months. It's been incredibly well behaved for the most part. But I think your point is absolutely correct. The spike risk in the shilling is all about the political dimension. And, we're into some kind of endgame here with Kofi has just been through town last week. Ocampo's due any moment. And really, it all depends. If it's all very neat and tidy, we could see the shilling up at 73 and beyond. But, we have a spike risk on the shilling right now.
Just one of the concerns here is that it's this spat, along with graft allegations against officials working for donor projects and state firms as well, that could affect monetary support that Kenya receives from its development partners. Do you see things going that far?
Yeah, that's exactly the dimension, I think, where the risks lie. I mean, if people start to play hardball, Alishia, that's the first thing they're going to talk about, cutting off some kind of monetary support in order to encourage the political class to go in the direction that they wish them to go. So I think that's the issue. I don't see it going that way. It seems to me that, we'll end up in a tidier resolution than most people think.
Okay, and we're going to turn our focus now back to the equity segment. I mentioned earlier a few of the counters that really stood in the spotlight on Friday's trading session. And we're going to start off with East African Portland Cement here. I mean, we saw the counter falling back 1 shilling after it announced plans to issue this convertible bond. Let's take a look at how the market is actually reading this and what they make of the plans of this company to actually fully hedge this yen-denominated loan that has been a heavy burden.
Yeah, that yen loan has sort of hung over the results year in, year out. And, if you're investing in Portland, you tend to be investing in a yen position as well. So I think it makes sense for them to try and square that risk off. Whether this is the right time to be doing it, the yen is pretty strong at the moment. Might get a little bit stronger. I'm not sure whether you'd want to square off the risk right now. But what's interesting is that the convertible bond would be a first. They're floating the idea of a convertible bond. It would be a first, as far as I'm aware, in the Kenyan capital markets. And I think they're trying to stir up activity in the share. It's very thinly traded. Of course, they had the results where they had this large gain that they took on the real estate portfolio. So there's some confusion. I think people are looking for more clarity.
Let's look at KenGen. It lost about 2% on Friday, and this before it actually comes out with its full-year profit announcement. The company, of course, is set to publish for the year to June by the end of this month, and many are anticipating that earnings growth could be lower because operation costs have gone up. Is that your outlook for the company moving forward?
Well, I think that, if you looked at the first 6 months, those were significantly worse than the previous year. And I think the drought, the lack of capacity constraints that we've seen have all pressured the bottom line. But I think a lot of it is in the price now, Alishia, because we're trading very near 10 shillings. These are multi-year lows. I think the concern has been that the balance sheet is being overloaded with too much debt. But actually, KenGen is a cost-plus business. The consumer wears the cost. And it's just a cost, whatever the cost is passed through. So I think investors are missing that connection, and the share price is a little bit dislocated right now.
Talking about debt, I mean, we've got Safaricom looking at entering the bond market last week. It's looking at total funding from the debt markets at 20 billion shillings. How are the markets viewing this position of Safaricom specifically and its level of gearing in the current market?
I think Safaricom's balance sheet actually is under-leveraged if you look at it. And I think from Safaricom's point of view, this is probably the best wholesale money they can get. And I, for one, think it gives them much more firepower in order to entrench their position over the next 12 to 18 months. They've got a large bet going on the IT sector, on the internet, the mobile internet. And, I think they need to entrench that and make sure they ride a J-curve in that, which is what I think they're focused on doing. With regard to the bond market, these numbers are quite stunning, and I think you're seeing a coming of age of the Kenyan capital markets in its ability to marshal what are eye-popping numbers. In the KenGen IPO, and I am told the Safaricom, in the KenGen bond, and I'm told the Safaricom bond is pretty much sold out.
Yeah, well, with that being the case, and a lot of attention diverted to the fixed income side of things, there's this reliance on foreign appetite on the equities side of the game. I mean, what do you see swaying foreign investor interest towards equities over this period now?
That's a really interesting point. You're quite correct, and we've seen a massive diversion of cash into the bond market. It's left the equity market quite fragile. But I think if you look across South Africa, you look at Nigeria, which is turning, you look at Kenya, sub-Saharan African markets to me have significantly underperformed even emerging markets. And I think foreign investors are beginning to find an appetite for frontier market, sub-Saharan risk. And I think it's those people who are going to carry this market higher from here.
Of course, we are standing on the threshold of an earnings reporting season. What's the market anticipating here? I mean, are you optimistic at all, given the various challenges that have hit a spectrum of sectors in the Kenyan economy?
No, that's an excellent question, but I think the market is now at such low levels, it's pretty much priced in all the news, all the negative news. So I think there is potential for a positive earnings surprise type response. And I think you might find that also in other African countries. It seems to me sentiment now is really very near rock bottom. Everything is in the price. And I do feel that we are going to get a rebound, and that rebound is going to come through reasonably quickly once the rain set in.
Let's look at the banking sector, because we know that this has been the darling of all sectors in the Kenyan economy over the recent past when it comes to earnings reports. What's your view on that sector specifically?
Well, it's trading at P's of around just under 10. This is the lowest PE threshold we've seen for a very long time. I think the banking counters are pricing in a very elongated L. I think it's wrong on that front. But nevertheless, we are in this epicenter of the V. They found it pretty hard going in this slower economy. But I think most of that's priced in. The exception amongst the top fives, of course, is Standard Chartered, which is trading, which saw a serious acceleration in the first 6 months. They were very defensive last year. But otherwise, I think the banking sector looks extremely cheap.
What's your view on Equity Bank? Because on Friday, the stock declined 0.7%, and this was a week in which we heard that Equity plans to reduce its cost per transaction tenfold as it expands agencies to the more remote and northern parts of the country.
I heard that too, and I'd be very interested to see the reasoning and the process, because that's a very, very bold number to throw out there.
Yeah.
But having said that, Equity Bank is aligned because of the number of accounts to GDP. We are in the L when it comes to GDP. I think they're highly correlated to it. A lot of the premium, the froth, has been knocked out of the share price now. You're getting in at a P of 12. And certainly, if you do think that East Africa, Kenya might accelerate, that will be the share to be in the next few months, once we see some kind of real economy data signaling a rebound.